Good afternoon, and thank you everyone for joining us here at Fintech Talents North America. My name is Theodora Lau, and I'm the founder of Unconventional Ventures. I'm joined here with my partner in crime, Bradley Limer, and our good friends, Kurt, Lida, and Patrick, literally from all around the world, to talk about our latest project, Beyond Good, and what it means for the financial services industry and, frankly, for nearly every type of organizations. Now, let's start by introducing everyone who are joining us here today. Kurt, would you like to start us off?
Sure. My name is Kurt Carews. I'm the president of Tab Bank located in Ogden, Utah.
And Lida?
I am Lida Gliptis. I'm the Chief Client Officer of 10X Banking.
And last but not least, we have Patrick.
Hey, Patrick Rivenbark. I'm the principal of the Rivenbark Group and been working in sort of fintech financial services for the last decade.
Yes, and he is also the one who was super grateful and nice to publish my first piece quite a few years ago. I would never forget that. Thank you, Patrick.
You're welcome. I'm glad I did it.
See, you see how that works, right? One piece and lead to a book. So thank you everyone for being with us today. We are super excited and super grateful for your time. Before we start, and before I forget, please make sure you put any questions or comments in the chat and we'll try to answer them as best we can. Now let's start with the book title. Brad, Beyond Good. This is your baby. And there's a story behind it, isn't there?
There's always a story behind these things. I think when we think about the business books that meant something to us, sort of growing up, right? 20 some odd years ago, Good to Great came out by Jim Collins, and what it did is it sort of tore apart the business models of 8 or 9 companies in financial services. It was Wells Fargo that was added to this list, and they broke down what management teams had to do, what the concept which became this hedgehog, which was behind driving the business, became. It talked about things like flywheels. It talked about things like why companies exist. And at the end of the day, Good to Great was about maximizing shareholder return. And it was about maximizing profitability. And it was about making businesses greater by becoming more profitable, more rich, more successful. And this idea that, in 20 some odd years, this book has influenced generations of people that are executives in teams, in companies of all sorts of sizes around the world, especially in financial services, really came to bear when we were coming down with this project, which was, how can we actually do more than just be successful by profit? How could we be more successful than just one company taking care of their executives? So the idea of going beyond good was just that, to develop a framework for a different way to think about both business structures, leadership, what your purpose is as a business, and just in general, how we can go beyond to take care of more people within our communities and within society in general. And I think between the 50 some odd contributors to this book and the 120 or 130 different companies that we profile, I think we did a pretty good job of at least creating a conversation for more leadership teams to really think about what they're doing. So that's really the story behind the title.
Create conversation and stir up some trouble. That's what we're good at. Kurt, you had a preview of the book. What do you think about that title and what Brad just said, and how does that relate to what you're doing? Because you're in a unique position, right? You're from a bank, and typically we think about bank and not so much so purpose and profit jive together. So, what are your thoughts on that?
Yeah, well, I mean, of course, you're asking me, and I'm sitting in front of the authors. I'm going to say it's a great title, yeah. But I really do think it is, because the paradigm that we're looking at in kind of the past that we've looked at, and look, I was trained in a B school, and profit is good, right? But the difference here, I think, is looking at things and what's good for me, right, might not be good for you. And so, how do you take the concept of doing good, right? And take it beyond just doing good for yourself, because and the book very clearly lays out what happens when you look at things in a very insular way and you only worry about yourself, right? So if I'm going to make a profit, then if I win, does someone else lose? And that's part of the problem, I think, when you look at some of the past business cases of doing everything to maximize profit. The book has a great parts of it that go in and talk about connectivity of all the businesses and ecosystems, and that's the part that really sang for me. And in order to really do good, you have to do good for the entire ecosystem, not just for yourself. I was telling someone this after I read the book. It's kind of like, really, in a very simplistic term, if I don't take care of my customer, and my customer goes bankrupt, then I don't have a customer, right? From a bank standpoint. And so I have to be concerned about not just making a profit. If I make it a profit at the expense of everything around me, eventually my business model goes under, right? And so doing good or social causes is very much, there's a groundswell, right? But it's not just enough to say, I want to do good. We all want to do good. Except maybe the psychopath, right? And so, what's beyond good? How do you do it? Where's the roadmap? And that's what I got out of the book. What I loved about the book was, there's kind of just this. It takes you through this ability to deconstruct the current business models and then reconstruct them in a new way. And so, can we survive? Can we make a profit and do good together? They're not mutually exclusive. It's not a one or the other, right? We can do both. And that's the beauty of the book. Is beyond good means, yeah, let's do good, and let's do good and make a profit and create and have the whole ecosystem rise together, not one at the expense of the other. And so it was really a rewarding book, because I think it allows you to kind of see past just the surface of it all.
Thank you, Kurt. Lita and Patrick, what do you guys think?
For me,
go ahead, Lita.
the title was not surprising, knowing the two of you. In the sense that in the time I have known you, you have led a conversation that is taking root and growing around empathy and humanity and responsibility in financial services. And although we're getting more accustomed to seeing that conversation, I do remember years ago when one or both of you would start one of those conversations, and myself, as well as the rest of your audience, would go, oh, wow, we can actually talk about this here. So for me, the title and the mission is so in keeping with the voice you guys have had, that it was more a case of about time. It's an interesting gauntlet you throw them, because one of the interesting things about the way you approach the question is that it's not just aspirational. It's doable. It's right there for the taking, and the way you raise the questions doesn't in any way diminish the complexity, but leaves you with this inevitability of, it's a matter of choice, and if we make the choice, we can do this, which again is in keeping, but it's a very interesting challenge you're presenting us all with.
Yeah, the to kind of build off both of those comments. I mean, I think one of the interesting things to think about that I think about a lot is when you think about the books that we're talking about before, or maximizing shareholder value. It's kind of like the word disruption a little bit. When it was made and coined, I'm not sure it carried all of this weight or all of these items that came with it, right? And I'm not sure, if you go and ask the folks that either in business school or wrote these books before, that they would have said by maximizing shareholder value or something, that it meant not making sure the community and the ecosystem was taken care of, right? But that's kind of where we've ended, right? We have lots of winner take all market, winner take this, and that's to your point of the book and beyond good is that's a choice, right? As Lita said, and I think that's really what we're getting at is it doesn't have to be this way. We can maybe take a little less of the profit and maybe give it back to the customers. We can, and we see those businesses and we celebrate those businesses a lot, but it hasn't become the default. And I think this challenge that you're laying out for it is really what we're getting at is, there's options, and if it doesn't fit the textbook, that may be okay. And I think that's what we're going to talk about today too. But that challenge is needed, and more people need to be kind of pushed to say, hey, maybe you can make a different decision.
Yeah, and I think, and I appreciate that all of your voices very much to sort of lend to that, because I think you said it in a much better way than I probably could have, or we could have, about the title itself. One of the things that we were very intentional about when writing this book is that we include more voices, maybe some of those voices that aren't always heard from within the ecosystem. And I think that to us was incredibly important. So we were so grateful that so many people wanted to come along with this journey and spend the time with us and support us and give us their input into what was being written within this framework. So sort of along those lines, and thinking about profitability and thinking about, the way we make decisions and the way that we make choices. Let's start with you, Lita. You had said once, if you're not empathetic and present, you've failed right out of the gate. And this is not something that financial institutions, whether you're an incumbent or a startup, are really good at. So could you talk more about that?
Of course I can, and you and I have had hours of conversations on this topic over the years, so you're probably going to have to stop me at some point. But you are absolutely right that the industry we are in has elevated the absence of empathy and the absence of actively present conversations to a fine art, because human emotion is weakness, because we are technocrats, because we are an industry that is all about predictable, measurable value. And we have taken that over the years to an absolutely obscene extreme of having no space for humanity and only wanting the upside of creativity and innovation, the outcome and the triumph and the creative genius without the frustration, the weakness, the doubt. We want people's commitment and presence without them falling to pieces because they just found out that their parent passed away or that their neighbor is sick. And that absence of emotion or awkwardness around the emotional side, and I don't just mean the emotive side, but I mean the emotional side of our existence, has been a big problem in our industry, because we leave half of the conversations out of the mix. When we're talking about aspiration, we're talking about the next job and the salary package. When we're talking about impact, we're talking about share price, and even our community responsibility has been boiled down to a few manageable metrics. And what I have seen over the years is that attempts to come out of this space have gone too far the other way. Rather than infusing presence and infusing empathy in our discussions, we've just removed structure. I've seen a lot of startups that have no titles, no performance reviews, because it's important to be human. And it's like, well, you've totally missed the point, missed the question, missed the boat. As Kurt was saying earlier, profit is not bad. Competition is not bad. Performance reviews and wanting people to do better is not bad. What is bad is doing all of that by reducing individuals to only the pieces of their lives and performance that we want, and somehow expecting that the rest of the human, with the anxieties and the dreams and the false starts, can somehow be put in a box. The reality is that it's all about keeping a balance between what you're trying to achieve and finding a way to both do and be good. And the reality of it, and I'll pause to get your reactions, is that we have for a very long time in our industry equated empathy with being soft, equated being a thoughtful, kind human with being either unambitious or not driven by results. And I absolutely object to that. To quote New Zealand's Prime Minister, I rebel against that idea, because the reality of allowing humans to be complete humans and being able to keep an eye on profitability without losing your humanity is, going back to the topic of your book, is about choice. It's about doing the right thing even when it's complicated, even when it needs balance, and actively investing in both serving the organization and the human in front of you at the same time, even when the way to balance both isn't obvious. At the end of the day, that's your job as a leader.
And I think this idea of empathy being soft is really interesting to kind of pull a thread of, or empathy being sort of something that we don't think about, unless we're sort of anti-capitalist. And I think that's really good to sort of highlight, because we're not necessarily anti-profit, anti-capitalism, anti-anything in the book. We're just trying to get people to think a little bit broader. Along those lines, let's start with you, Patrick, and then go to Kurt. Think about the way that we think about community and ecosystems and the players that are within them, and how to be more inclusive of our community. Talk a little bit about how empathy comes into the mindset of something that's broader than just maybe one company or one entity. Let's start with there.
Well, yeah, and to build off of what Lita was saying, and this, I mean, part of it is we've gotten to this, I'm going to say, atomization of the world, right? Whether it's in metrics or data, and we think that because we see this trend, it's sort of, we see the whole picture, right? And whether that's with people and their performance, whether that's with the financial metrics of our company and that performance, that because we've got this so data science thing, which is really amazing, right? So not to discount the benefits that it's had, but it just feels like we think we have this crystal ball that this data then leads to, we understand everything after that. We understand all the implications, what it will be, right? And to that point of whether it's understanding that there may be an anomaly, understanding there may be an exception, understanding that someone may be worth that risk, or maybe worth that loan, or maybe worth that bank account. But right now, it feels like that lack of empathy, how I view it, and as we were talking here a little bit, was that we're sort of offloading the decisions of being a human, of those hard decisions, to the numbers, right? We're putting it to the metrics, and we're saying, well, this number makes it so I don't have to make the decision. The model did, the data did, the whatever did. And that's, I think, sort of this gap. And again, not to say that those amazing advances and algorithms and those metrics aren't useful, but they're only one tool of the people and the communities that we serve. And so Kurt, I'd love to hear you kind of your take on it. But I think that's it, is that we've reduced everything to some metric or some outcome, as they were saying, and divorced it from the rest of what that means. So that's in the systems that we're a part of. I mean, I think that's what you're getting at, is the communities are part of this system, and we have to be one of many within it, right?
Yeah, I think just making sure I was unmuted there. The concept of community is really interesting, particularly you talk about empathy, because for us at Tab Bank, we're a digital bank, and we have been for 22 years, meaning you could not walk into a branch. We don't have any, and you never could in 22 years. And so what does that mean for empathy, right? Well, if you're a bank or a business and your clients can't see you face to face, can you still create empathy? And I would tell you that I think we're a case and a proof point that you can. And we would lean into that knowledge of the customer, but we're using digital means. And our community today, I started in college. I was a bank teller. And one of the things I learned, because we didn't have, everything wasn't automated, because this was a really long time ago, I would have to go check the register, to check on a account. So I'd literally have to leave my seat and go to a big green and white, computer printout to look for the customer's name and see they had the money in the account, right? So I would get to know the customers that would come to my teller line, and I could recognize them by face, and I could pick up on patterns and say, okay, well, this client's always got much more money, and I would skip a step, right, and serve the customer faster. That little bit made the customer feel like I was taking extra care of them, that I knew them, that I had empathy, right? Well, that's an algorithm, right? My brain basically said, well, here's a pattern of this customer coming in every day. I can use that pattern to make a decision on my own to serve the customer. That's the empathy part of it, right? Is that customization, that personalization, that looking after me. And we've been able to take our net promoter scores at the bank from the mid 40s to the 72. And it's not because we're sitting in front of our customers creating this face-to-face empathy. Our community, half of our customers are truck drivers, so they're across the country, and we do things that let them know that we understand what they're going through and their unique needs, and that we can solve them, that we got their back, right? And I think when you start to see that technology can really level set the playing field, and then if we use that for good, again, back to that title word, that we get this holistic sense of not just empathy but trust, and that is the basis of a foundation. And would somebody pay, would you pay a few extra cents or dollars because you trust that provider, particularly if it's something like money? Well, sure, I think we could easily say everybody would. So that the opportunity is, right, do we take empathy? Can we do empathy through bits and bytes that go, through our computer screen or our phone screen? And I think the answer is yes. And not only yes, but the opportunity now is to level set and give everybody that same opportunity. So the next person in my teller line, if I didn't know them, I'd have to go do all this extra work. Well, technology level sets and gives me insights into more that's going on. Now, can we use these insights to better the outcome for the customer? And can we build models that say, if the customer succeeds, then I'm going to succeed? And I'm providing that value of trust and empathy back there to cover their back, to say, I got you. We're looking out after you.
I like that, Kurt. You do say that a lot. I remember even on passing or, whenever we interact, you stress the importance of does the bank have the back of your customers? And that is so important, so crucial. Doesn't matter what industry you're in. It's always the customer first and foremost. That's how you remain in business. So Patrick, taking that point and tangentially, I know you're a big fan of Team Human, a book by Douglas Rushkoff. I think you love their podcast too. I remember we talked about that on stage, and you often remind us of the importance of valuing humans first and foremost, right? Technology is a piece of the puzzle. It allows us to be better supplier of services, for lack of better words. What should the banks and fintech's priorities be then when it comes to business models, and how do we balance that? What does the future of banking look like? It's a loaded question.
Well, first, I was about to say, and most importantly, I'm a fan of the real Team Human, which we're all on, right? But not just the book. But I think what was good about the book was, and I'm going to steal sort of something from Ben Thompson at Stratechery of putting the value stack, right? What's on top? Like if you're going to have this choice of what are those priorities you're going to make, how are you going to make them, and how does that fit your business model, right? And so part of what that I've been thinking about from that book, from a lot of things that we've been talking about as a group, and is this choice of are we set up to have our incentives aligned, right? Is having the trust of sort of my deposit of money being where I do all this work outside of the bank and I have this value and some of that's given to me in the form of money and I put it in there. Is that business model sort of aligned with the bank's business model of lending that money out to someone else, right? And it's not necessarily that it is or it isn't, but they're not, I guess dynamically right at aligned from the beginning. So to that point, I think we're already seeing it happen, right? At least in the U.S. So I can't speak for the rest of the world, but this idea of sponsor banks, right? I mean, community banks and what Kurt's doing. I mean, there's been a long history of community-driven kind of banking models that really care about investing in and making that decision in their communities. So it's, we're sort of seeing that evolve. And then technology, as Kurt rightly pointed out, is enabling these community banks to serve these fintechs. And in turn, they are actually serving niche communities, and so it's starting there, and it's getting a little closer. I think the question that sort of we're getting at too is, can we make that faster, right? Can we accelerate that trend, and how do we not let either regulation or sort of the status quo get in the way of that, while not just having a very important industry like financial services be sort of make fast and break things, right? Because we are talking about trusting with people's money, and that is representative of their life and their work and what they're doing. And how do we maybe get beyond some of these traditional models of who has access to those systems or what types of products are they in the best interest of the customer? And we're seeing it happen, right? So the future, in short, I think, looks like that money and finances and banking is being pushed closer to when you're using it, right? It's pushed close to those affinity groups, to those communities, to those business models, and we're seeing that today. And the closer it gets, I think the better decisions are going to be made around, what's the right model, right, around banking and financial services. But what's on first and what's top of that value stack, and hopefully that's our fellow humans and the communities we live in, and then everything else.
I can't say I disagree. I actually recently talked to someone about, technology, because in the last 5-10 years, we have seen a tsunami, if you will, of new technology being deployed and financial institutions attempting to use them. But at the end of the day, what I told them is, look, it's not about the customer depositing that $1,000 in your account or the customer taking out a loan from your bank. It's about what they're trying to do with that money. What is their goal? What are they trying to achieve, right? That is the end point, and that is the fulfilling part, is you are an enabler to their dreams, to their aspirations, to something that they want to get to. And to that, Kurt, I know that you literally, this is your bread and butter, serving customers and serving them well. And you are probably one of the few in the US, and comes to complete 100% digital banking, that you're able to accomplish that, just like what we talked about. What's the next for you? What would the future be like?
Well, that's a big question, isn't it? We see, we kind of, when we look to the future, and we think about our customers and success, and I literally boil it down to sleeping well at night, right? Because I think the opportunity is to take the stresses that come along with finances that everybody has, and it's a unique problem. We did focus groups, and we're not a bank that serves wealth management customers. I mean, that's not our business model. But we do have some customers who are, wealthy, and range the spectrum. And what's interesting when you go in and ask certain questions in focus groups is everybody has anxiety about money, even people that you would look at objectively and say, well, they're doing very well. Why aren't they sleeping well? Why aren't they sleeping well at night? And I think, part of that is that we've driven our focus to profits and possessions and as being the main metric, right? And I think in the future, we have the opportunity to kind of wash that away and reset our priorities as an organization. And notwithstanding what was said before, we need to make profit, right? And Leader pointed that out. As a bank, I have to make a profit or I won't survive. So I have to make a profit. It's just, how do you find that balance where we can, we can really live the promise that we see in sci-fi, shows, right? Where money fades into the background and people live their best lives and pursue other kinds of passions, right? And that we're not all driven by profit. But does that mean that everybody lives in poverty? No, it means, we're using this technology to create opportunities that I think can be had by all, right? Bigger pie that you can slice up into more pieces and all of those kinds of things. So, I look at our business model and I say, well, what is it that people need? And they need to, move friction points, remove anxiety, remove worry. Some of those things we can't do from an industry, right? The government has to come in and control certain aspects, set regulations, guide, kind of economic output. But that's a very small component and sometimes wrong-headed in its pursuits. And so, from a business standpoint, can we bend the arc in the right direction and still, bring those profits to bear? Yeah, and I can look at at a great example here in the United States, the Paycheck Protection Program, with all its faults, and there's fraud in it. You can say all those things. I know that technology allowed us to walk in, to open the doors in a very short period of time, and serve some 4,000 small businesses, most of which were not customers of Tab Bank when it started. But and I've talked to customers directly, and I've heard from them, and I've gotten unsolicited emails, about the good and saving their business. And so there's a profit to that for us. We had about a 20% reduction in our core businesses through the pandemic. We were able to lean into doing good and make a profit off of it. Not as much as we lost from the revenue from the pandemic, but the difference is when I see with our staff the reward they get for doing good, right? When they talk about in chats the bank about, oh, this, here's a story of this one business owner, and she was crying on the phone, and she was so happy, and doing good releases endorphins. So let's just, and all those good things in our brain, let's all get high together on this new opportunity, right? I think we could do it. And who wouldn't want to lean into that, right? So I don't know. I think there's a level setting, there's an opportunity for us to kind of, and that's where the book's really great, because to me, deconstruction and reconstructs in very methodical way, with lots of examples of how it can be done. There's a lot of examples in the bank of very successful businesses, financial institutions, and others that do good, and not just in name. They really do good. They can point to the examples.
Yeah, and I think that's one of the things.
Can I add one thing,
yeah.
Theo? I think it's really interesting to what you're talking about. So two things, Kurt. One thing you said was interesting about, I just wonder how many sort of metrics at banks are saying, our metric is to having people to sleep better at night, right? I'm not really sure that, but that's a really, I think, encapsulating message of all the things that we can't capture on spreadsheets, but inhumanly we kind of know, I know what that means, right? I know it provided them a service and trust. The other thing that's interesting, and Theo, that you mentioned that I think is always good for our industry to kind of remind ourselves we should be more behind the scenes, right? We are enablers, and we are enabling businesses and enterprises and families and things like that. And instead of trying to be at the front of it and have large financial institutions dictate the conversation about how much money they did make, that maybe the metric is more about the customers that they serve. And I think you see that with some of these fintech customers, or something like Shopify, I think is a great example of. Shopify is really successful, but every time they talk, it's about those businesses that they're enabling, or something like that, right? And those metrics, that what we're choosing to do, less financial metrics and more enablement metrics, I think those are just really two good points to kind of encapsulate what we're talking about. Sorry.
And I know, Theo, you were about to wrap us up, and I love what I'm hearing, but essentially, if we want to distill everything that has been said to one sentence, it's intent, right? Because essentially what we're saying, and Patrick, I agree with every word you said, and Kurt, I could listen to you for hours. If you start off intending to do a thing a certain way, then you can. And that's all there is to it. And I do think that you can actually have some pretty hard metrics around what helping someone sleep well at night looks like. It looks like a well-funded business. It looks like not defaulting on loans. It looks like stable growth for these businesses because they manage their finances in a way that is accessible and not scary and non-predatory. And we know that it is possible to do good and be profitable. I know that it's far from a perfect example, but it's my go-to one. The Grameen project, it worked. It was profitable. What was different about it and any other microlending attempt before it was that it didn't start with limiting beliefs about what it was trying to achieve. And what I'm hearing, and what Patrick, you said, and what Kurt, you said, is that sure, if you say that, all I'm going to measure is return on equity, and if people are happy, great. And if they're not, also great. Then you're only going to get so far, and you're going to have the individuals that are empathetic in their own small world, maybe, and the individuals that aren't. And in terms of how they perform against what the business is trying to do, you'd be in the same place. But if from a position of leadership, like you, Kurt, but so many others, you say that the intent we're setting for ourselves is profitability and doing good, and these are the metrics, and this is how we will achieve it, then the ability to have a sustainable, profitable, extremely healthy business that delivers to those metrics, the chances are high. We know the economics work. What will not happen is doing good suddenly accidentally materializing on the side of a business that has been set up with a business model that is super traditionally purely capitalist. And you know, some of the challengers we see, particularly in Europe, have very nice UX on top of a very traditional business model, is the ones that say, I'm going to ask the questions differently, make money, be viable, but plant trees, be carbon neutral, be good to the communities, give back. And I do think that it goes all the way back to the intentionality of the business model. If you set out to do it and you set up your business to do it and you expect your people to do it, then you will do it. If you leave it to chance, it will be done by some good people in the best way they can, not moving the needle for anyone enough.
Absolutely, couldn't agree more. You know, one of the things that we wanted to make sure that we got across in this book was that the business models, regardless of whether it's financial services or technology or just about any sort of good or service, is that it is disproportionately serving the people in our communities. And this past year, if anything, has demonstrated to us that this disproportionate impact of both COVID-19, the pandemic, and the way the businesses have responded have really hurt and not benefited communities of color, women, older adults, people that are working in the gig economy, and so many small businesses. And we talk about that from the benefit of food, water, and shelter, and how our business model is helping provide for more people. How can we build back better, be more inclusive within more members of our community, and get more people to see that it's not just profit tied to the person in front of us, it's profit tied to the entire community that we serve? Really quick, about a minute each, could you just talk about how we could be more inclusive in terms of going forward? Kurt, let's start with you.
Well, you know, that's another big question you framed very simply, but you know, I think to Lita's point, intent is absolutely critical, right? It's like, what is it? You know, you've got to get in the shoes of your potential customers. I watched. There's a fintech that I know very well that has been working on credit models and such, and you know, they took a new product, they designed it such, and they used alternative data, and they've got credit scores from below 600. And they've been back tested, and they only had 5% of their customers default on this new credit structure and these new techniques. And I think, you know, that's an incredible stat if you're not familiar with kind of that ratios. And I think that it can be done, but you've got to lean into the hard work. And Patrick was saying this too. It's like you've got to say, okay, we're very smart people. Let's figure out how to bring more inclusive kind of behavior so that more people have access to credit, more people have access to payment systems, more people have access to savings, all those kinds of things. And then it just will happen organically. But be purposeful, be intent on succeeding at this and figuring it out.
Lita, final thoughts on this one?
To add to what Kurt said, because actually we could stop here and that would be enough, but to just add to that is being open to being challenged, to not doing enough, and seeing examples from other industries, other communities, of something that is like, oh wow, never thought that would work, and then not saying, oh, good for them, and leaving it there, but going, okay, what uncomfortable truth has that uncovered about me and my business, and how can I take it back, digest it, and figure out that actually there was a wall, there was a boundary, I wasn't aware it was there, And now I know it was there, and knowing that it was there, I now have to be intentional about going through it and opening ourselves to that constant challenge, that there will be inspirational ideas that expose our own limitations to our own thinking to us. Are we actively looking for them and letting them into our lives so that we know that we can be smarter each day, and not just because we thought of something on our own?
Patrick, your thoughts, final thoughts.
Yeah. So let's bring it into three things. So one, I do think what's happening, at least from a U.S. perspective, kind of the sponsor banking element is going to help accelerate who is embedding finance in their businesses and who's in sort of control of that. I think that's already helping. Two, I mean, I think having some more, I'll call it minority ownership of these institutions, right? I mean, we have almost 10,000, well, a little less than 10,000 institutions these days. I'm not sure that's a very diverse population, which, we don't need to talk about how we got there. That doesn't matter. How do we change that? And three, I think sort of what we're talking about a little bit too is, who's at the accounting or the P&L or the budgeting saying we're going to take some of this capital and we're going to make it quote unquote risk capital. I mean, most banks are fighting for the same customers, right? They want the guaranteed customers, the best customer, the credit score customer, whatever it may be. But we know that you give people a chance. Like, someone had to get that loan, get that break, get that capital to get their business running. Taking some more risk there, right? And trying to drive up folks who have quote unquote a less credit score or something like that. How much of it is we're perpetuating, they're not a worthy customer because we don't give them great products and services, because we say, you can't. Well, who's changing that, and who's taking that risk there, and maybe saying, hey, we're willing to take a little more loss than usual, but that doesn't really fit the model every once in a while, as we've been talking about. So those are the three that I would sort of think on for today.
Well, Patrick, we appreciate that. And Kurt and Lita, thank you so much for joining us today. It's been a pleasure and a privilege to be part of writing this book, and to the entire community really to get it through. So thank you all.
Yes, and we also want to take the opportunity to thank Ida from Aspen Institute, who wrote the beautiful foreword for the book, and David Reiling, who shared with us his inspirational story behind the founding of B Corp Sunrise Bank. To all of our friends who have contributed to the book, to our publisher, Kogan Page, for making this a reality for us. Do visit beyondgoodbook.com if you're interested to learn more. You can pick it up from Amazon, Barnes & Noble, bookshop.org, or anywhere books are sold. Before we close, I want to leave you with this one visual. This is something that I read last year and it stuck with me. And it says, if everyone were to sit on their own pile of wealth, piled up in $100 bills, imagine that. A middle-class person in a rich country would be at the height of a chair. The world's two richest men, they'll be sitting in outer space. That was a powerful visual, because that was what guided the rest of us into the purpose, into how we need to go beyond good. As all of you said, it is a choice, it is intentional. So we do hope we can continue the conversation and turn this into a movement, not just a 40-minute conference. And thank you, Lisa and Victor, for putting this on, but we need to do more. And we are very grateful for everyone's words of encouragement. Thank you all for being with us today, and stay with us on the Impact Stage for more discussions on how to reshape financial services. Thank you.